Well, listen, it happened faster than anyone would have thought. We had COVID, and that started a chain reaction. It started a chain reaction of a macro story that made a wonderful backdrop for Bitcoin, for the digitalization of everything. And we started seeing one group of investors after another. So it was corporates with Square and MicroStrategy and Tesla. It was insurance companies with Mass Financial and others. It's high net worth individuals, it's ETFs. And all of a sudden, we went from a world where buying Bitcoin was kind of fringy or risky to not having it being risky, right? To not having it as part of your portfolio in a world of central banks printing money. And so our business at Galaxy is booming. We can't hire salesmen fast enough to cover all the institutional accounts that want to either understand it or participate.
And obviously, we're seeing a lot of different ways by which people are showing interest in investing. We highlighted the ETF rollout in this country, which you guys are involved with. And I'm curious to know about what you see in the landscape, for example, in Canada versus in the United States.
Listen, Canada has been first, the first of the ETF. We're probably 6 months at least away in the U.S. from having one. And so kind of been a leader. And we listed in Canada because the venture exchange was, willing to list a crypto company. It's kind of a unique thing that Canada has, this venture exchange, and allowed us to kind of raise capital and get going. A lot of the Ethereum network founders are Canadian. And so there's definitely a crypto DNA up north. We haven't seen the big institutions from Canada, at least publicly get involved yet, but I know they're all working on it. And so that'll be exciting. But I think this is really a paradigm shift. If I was just looking at the chart of Bitcoin and it was a normal asset, I'd be really, really nervous because it's moved so fast, so far, so fast. But when you go through a paradigm shift, sometimes the charts and the standard deviations don't matter as much. And this really is a shift. There was not an institutional asset class 6 months ago, and it is an institutional asset class today. And so it's really difficult to figure out how far it goes. We originally said 10% of gold for Bitcoin. It got 10% of gold within the first 6 weeks. Will it surpass gold? It certainly will at one point. If you think about the digital camera, we now take more pictures in 2 hours than all photos taken in the 20th century. And so when things shift from analog to digital, from the physical to digital, they tend to grow a lot faster than anyone thinks.
It's interesting. You mentioned the adoption from companies, Tesla and Square being great examples recently that got a lot of attention for essentially using what traditionally would be cash in your Treasury Department or space in your Treasury Department for cash and making investments in Bitcoin. Here in Canada, when we reached out, for example, to the big Canadian banks to ask them, would they think about doing something like that, they were very shy to say anything. We got a lot of no comments, at least for now. We also spoke to a former bank CEO from Bank of New York Mellon, Bob Kelly. I'm just going to reiterate what he said to us, Mike, and get your reaction. He said, unlike a real currency, you're not talking about a guaranteed store of value. He pointed to the fact that, this is not widely used for payments. And then in terms of corporate treasury departments buying Bitcoin, he said, I would not put anything on my balance sheet I can't fundamentally value. Can you walk us behind closed doors on what kind of conversations are taking place right now?
Yeah, I think, treasuries are looking at this from 3 different reasons. One, treasuries with a lot of excess cash are saying the dollar is depreciating and I want to stop it. So there's just a macro trade for some treasuries. Now, most treasuries don't have that much corporate cash. The second is a signaling, right? Bitcoin and other cryptos are really the currency of Gen Z and millennials. And so you put some of your corporate treasury and corporate cash, you send a strong message to young consumers that you hear them, that you're part of their community. The third is using it, right? Like you're going to see the tech companies in America, mark my words, start putting Bitcoin on their treasuries because they understand that in 5 years, we won't have bank accounts. We'll all have wallets. It's why PayPal got involved. It's why you're seeing Facebook get involved. They're all going to get involved, right? The Apple Wallet will be crazy if it doesn't have Bitcoin accessibility. and other crypto accessibility. Canada just announced it's moving to a central bank issued digital currency faster than anybody thought. And so as we make this shift from traditional payment networks to blockchain-based payment networks, as we rebuild finance on top of a blockchain, you're going to see the tech companies move faster than the banks. But banks are moving too. I mean, Bank of New York said that, but at the same time, they're starting a custody business for all this stuff. And so there's a schizophrenia at banks. Banks are at the biggest threat, are the biggest potential victim to the cryptocurrency blockchain revolution are the traditional banks, right? Decentralized finance is going to go right after the J.P. Morgans, Goldman Sachs, Merrill Lynch's, and Bank of New York's.
And speaking of disruption, we mentioned the different components to Galaxy Digital. Yes, you're helping to facilitate trading and sort of growing, the investment side of the business, but you're also making these targeted investments in companies that, through blockchain technology, are looking to change the game. It's quite a long list of companies that you guys have now invested in. What exactly are you looking at?
Listen, we like any venture investors, you look for great teams with great ideas, and you invest in them. We've invested across the whole ecosystem, from protocols to trading networks to custody. We're really trying to invest for two reasons: A, to make capital, to make returns on our investors' capital, and it's been a great part of our business. But B, to really understand what's happening. When you invest in a company like Uniswap, which is a decentralized exchange, you can start seeing where the NASDAQ, the New York Stock Exchange, the TSX could be under real threat, right? These are peer-to-peer systems, driverless banks or driverless insurance companies. They're not ready for prime time yet, but they're growing fast. They still have regulatory issues to work out, right? We need to make sure these things are regulatory compliant. But as soon as that kink gets worked out, these things are going to eat the lunch of traditional exchanges. And so by us investing in those companies, it allows us to communicate to our institutional clients what's coming. But even if they're just buying Bitcoin, they start to understand that we see the future better than they're seeing it. That's the whole thesis of Galaxy, to try to be the smartest guys in the room. There are a lot of smart guys out there, so we're working awfully hard. But that's why we have this big venture portfolio.
Certainly a lot of smart men and women that are looking at this sector right now. Mike, before I let you go, since you made those calls on where Bitcoin could be headed in the past with us that ended up coming to fruition, what's your call for Bitcoin? Where do you think prices are going?
Listen, it feels like we're going to consolidate a little bit here in this 50,000 area, caught a 42 to 60,000. But then the next big leg is up to 100,000, and that wouldn't surprise me at all if we crack 100 by the end of the year. It surprises me. I'm saying that, where I was in November, but the adoption I'm seeing is shocking. And it's not like I'm just guessing. I'm looking behind me, in front of me, and seeing all these new projects that are coming. Banks that are going to issue, products for their wealth management businesses. Every big bank in America is working on a wealth management product. And so we're going to get into the baby boomers sooner than I thought we would.